Hey traders, this is Ron Hayden at Market Tamer. Happy Wednesday, happy hump day. Hope you had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the Qs. Big sell-off today. Although volume was high in some cases, but it was not as high as the February sell-off. So that's noteworthy. Now, if we start with the Qs, worst of the selling pressure. Down 4.4%, 113 million shares. Back into February, we hit 100 million. So this one's a little above. When we get to the S&P next, it was actually far less than the previous volume. But the Qs right now are near their 200-day moving average. The last time we were there was back in February, and then got real close in April twice. If on the daily charts, the 200-day falls, the next target's all the way down to 155. That would be another like 16 points. That would be like 2 more days like today. That would be big. As of right now, if I zoom in, we are well outside the 2 standard deviation John Bollinger bands. There was the band. We're down here. Therefore, we should see a bit of a pop or a consolidation day tomorrow. If we go back and look at the February sell-off, big down day, gapped lower, sent the VIX spiking, ended up closing back up here. Then we rolled over and finally put in a low. And that was going to hold for, about a month and a half. If we take a look at the SPY, which I have a bullish position in, the SPY lost 3% today. The last time it had a big day like this was back on, I'd say, February 5th. The volume was 293 million. Let's just say 300 million shares. Today was only 200 million. There's about an 80, 90 million share difference. That's like 50% difference. It's huge. So considering all the carnage, the SPY did not see that kind of massive selling pressure. Target 200-day moving average in purple. Right now it's 274. It's another 40 points, so half as much as today. If that falls, this I would say 255 to 260 would be the support zone. Also keep a note, I have the RSI in here. It is below 30. And when we typically get readings below 30, you've seen an immediate bounce. Doesn't mean the bottom's in, but trying to be bearish at that point is not always the best choice because you've come down extremely hard. 2 standard deviation Bollinger bands suggest there's going to be a pop. It just doesn't work well together. You're getting, quote, an oversold reading on the RSI. It's almost too weak. Oversold on the Bollinger band. Again, probably should see a bounce here. There's no guarantee, though. We could just go down as much tomorrow. But from a probability perspective, today was a lot. There should be some relief at some point tomorrow. All right, now let's go take a look at DIA. The diamonds down 3%. Again, the volume back on, here it is, the 5th, 19 million shares on the DIA ETF. Today only 12 million. Again, 50% less, big, or it would take 50% more volume to get there. With this kind of drop, we busted through the 50-day, target 200-day, 250. So another $6. So it's going to be less than 3% to get there. If that falls, then you go back down into this range down here. The IWM, the Russell 2000, this one has been leading to decline, but it was one of the better performers today, only down 2.8%. Target, frankly, 145, 150. Still long ways off, another day or two like today. MDY, 2.5% loss. Again, volume was not excruciating. It was 1.9 million on the MDY, but back in February, again, after an amazing holiday year-end rally, we saw what, 3 million? It's following along with the S&P and the Dow. The volume spikes weren't there. Where the volume spikes were was tech land. And typically I view tech as more of a retail sector. So it looks like retail folks freaked out today, but more of the institution-based international money didn't freak out quite as much. Going to the VIX, it jumped 43% today. The reading is 2296. If you go back and look at February, closed near the highs of the day, and then we had another big spike, and then it came back down. So we'd probably have another big spike if we use that as a guide. Again, just sort of what some of the indexes are showing too. There's a little more room before support arrives, so it's sort of all lining up. All right, let's take a look at SMH. Let's take a look at some major ETFs. So the semis were down 4.5%. They've already cut through the low, if you will, in April, May. There's a little bit more there, but man, if the semis can't hold that support level right around, call it 95, the next major support level is down at 85. So there is room if it wants to try to bust through support here. The IYT, which are your transports, they cut through the 200-day moving average in purple like a hot knife through butter. Their target area is going to be about 185 down into 180. You look at the banks, they actually weren't down too bad, 3%. There was a little bit of a volume spike up to 100 million. You know, you go back into March, we saw some volume up around 192 million on a sell-off, but you're still range bound. Even though there was big volume today and it's a big headline number of 3%, you have to say, but what did it do? It did nothing to the technical picture. Okay, short-term we're bearish, but we still have all these support levels in here. So if we get below, let's say 20, I even go 26. We get below 26, then it gets my attention. If we're down another 1 or 2% tomorrow, it really is irrelevant. We're just in a big trading range. All right, let's take a look at some individual stocks. Here is Apple, down 10 bucks. You know, sounds big, but it's only 4+%. However, we broke the 50-day moving average. The next support for Apple would literally be down here at 190 to 195-ish, that gap area, plus the 200-day moving average is coming in there too. So that would be the downside target, assuming we even get there. How about Google? 4.6%, gap right down through the 200-day. That was a bad sign. It gapped below and then it just kept going. Support 1,000, another 90 bucks lower. That's a lot, you know, almost $100, which is 10%. And they have earnings reports coming up. And I said to you guys a couple days ago, sort of as a public service reminder, earnings season is coming. So if some of these stocks started to look weak and started to break down, which Google was, it could not get above the 50-day in orange, institutional moving average starting to roll over, you can consider protected puts already. And then today's move just puts more value in those puts. It protects the position from getting annihilated by $53. Typically, I like to have folks practice buying puts, 45, 90 days in time in a paper trading portfolio, because I am not a licensed financial advisor. I cannot tell you what to do. It's just educational commentary that I offer. And see how those puts play out in a paper trading account. And you would say, wow, maybe when Google was at 1175, if I were to buy an at the money put 2 months out in time to cover earnings, what would that put look like today? Thinkorswim has think back. You can go analyze and then hit think back, and you can see what those puts would be worth. But it's a great lesson to learn in front of these earnings reports. All right, back to stocks. Keep going here. Amazon, 6% drop. Target, I think, 200-day moving average. If that falls, well, holy moly. Now, Amazon broke support back on the 5th and even the 4th, right? 4th and 5th. Plenty of opportunity to consider a protected put at that stage. They have earnings coming up 10/24, still 2 weeks away. NVIDIA, NVDA down almost 20 bucks, 7.5%, right on the 200-day. I would say support 220-ish, 215-ish, something like that. And here is Netflix down 8%, right on its 200-day earnings 6 days from now. The next support level, in reality, the big one is 200. There's a couple little ones here, 275, 250, gap fill at 225, but the old breakout from January would be the target. So that's it, folks. Longer video tonight. Overall, we are in pullback mode. October's, from a seasonality perspective, is basically flat, meaning there's up and down years, but there's no huge bias. However, at the end of the month, it goes strongly bullish. So from a time perspective, if a pullback was going to occur, the next 2 weeks is when it's on. And that's what we're doing so far. So I wish you guys all the best. I will be back tomorrow with a video because I have a feeling we're going to get some fireworks. I wouldn't be surprised to see a gap down and then an attempt at a reversal. If the SPY volume and the diamonds volume would have been higher, that would be even more worrisome. But as of right now, it just wasn't there. Only the Qs sold off super hard. Again, wish you guys all the best. See you next time. Take care.